Okay, so this is going to be the recap for days 4 through to 6, I think. So I haven't done daily yet because I haven't actually taken any trades in the last 3 days. Monday was no trades, Tuesday was no trades, and Thursday was no trades. But recapping, I recapped them in my own head throughout the days, like Monday night and Tuesday night, etc. I just didn't actually upload it, or really make any video of it, but I'm making the video today. So we'll go back and analyze them. So on Monday, definitely, I couldn't have taken a trade, and like, yeah, full stop. I think I did Monday pretty well, really. I'll explain that. I laid out the trade that could have possibly been taken, but because I stuck to my rules and my daily bias, I wouldn't have been able to take it anyways, which I didn't take it. So Monday was a good day in terms of that. As you can see, say change the time frame, we can see, we know that even by looking at the fifth, I will change time frames actually just for the video. We know, looking at Monday was, it was Monday, here was Monday, Monday was here, that we have been, we've had an uptrend. I think even we broke structure to the upside on the hourly by Monday morning, the candle before market open and everything. So we're clearly on an uptrend. This is a given, clearly an uptrend. We even broke structure again on the hourly, so we were on an uptrend. Looking at the 5 minute on Monday, we swept liquidity. It was hourly liquidity way off of it. I'm not going to scroll to it, but we swept liquidity, created this order block. Price came out of the order block, came out of equilibrium, came back up into the order block, filled more orders. We break structure to the downside. That's where we would have entered, but completely against our daily bias, so we're not going to enter that. We had a 1 hour BPR here, somewhere like that. So because we had a BPR, I was pretty confident the price was going to move down to this BPR because it's an hourly BPR. Higher time frames hold higher confluences and higher power. Come on, hourly BPR. I was pretty confident price was going to go down to this and at least tap this BPR, which eventually it would have broke through it. But we'll get to that in a minute. So I didn't enter, even though I was quite confident price was going to at least come down to this BPR and then rebound back off. I didn't enter because it's against my daily bias. Price, well, let me tell you, I did enter, and I entered here off this break structure. Price came back up and but when I entered with a really little amount, like 0.3% of the account size, like ridiculously small. And then price was doing this, and at this point it was already like 3 o'clock, or coming up to 4 o'clock, and I was like, nah, I took a sell on this when we were almost break even. I think I lost like $15, so whatever, I had to do such little, it didn't really matter. But yeah, and I knew that because of my daily bias. But so I did really stick to my trading plan. I probably shouldn't have even took that thinking about it, even though it essentially would have been if I was careful. And I would have traded my stop loss anyway, so I would have got stopped out, but properly on a, we'll say, would have got stopped out like a 1-to-1 ish really. So that was that. That was Monday. So Monday nothing really happened. Tuesday is where I'm a little bit could be kicking myself, and I'll explain why I would be kicking myself on Tuesday. Because again, I think we even broke structure to the. Did we again bullish? I don't need to go over it again. We were clearly bullish on the daily bias again for Tuesday, so we're going to be looking for longs. Okay, going to be looking for longs. So price market opened like 9. Okay, whatever. We created a 15-minute fair value gap, and there was the only real imbalance on the charts Tuesday morning. It was this 15-minute fair value gap, bullish fair value gap, I should say. Price mucked about a bit, and then the reason I didn't enter this trade was because it was messy. So we swept liquidity. I'll draw liquidity now so we can see this low here. If I align it right, like so. Make sure it's level. I'll be really precise with this now. Boom. And if we do really zoom in, you can see here we did sweep the low. Okay, so we swept the low. When we swept this low, we created a order block, which would have been here, really, like that would say. Okay, we created this order block. Price came out of the order block, came back into the order block, break of structure to the upside, enter here for a long, and we came out of equilibrium as well, for that matter. Enter for a long on the break of structure. I think I did target an area of liquidity way over there, on like the hourly way over there. And obviously we smashed it 1 to 8.5. It could have had a 1 to 2, realistically, not that hard. Could have had a 1 to 2, but I didn't take this trade because it looked messy to me. If we look at previous ones, how smooth, you know, we sweep liquidity, we come out of the order block, we come out of equilibrium, then we come back in, break of structure to the downside perfectly, then we enter. Like some of these trades, like look how smooth that is compared to what it was looking like Tuesday. Like look at that, even on the 5 minutes, so choppy, and that really put me off entering. I think that is trading with emotions. You know, realistically my rules were hit. Order block, we swept liquidity, we had an order block, we broke out the order block, came back in, filled more orders, back into equilibrium at a discounted price, and then break structure to the upside in a bullish daily bias. The rules are there, I just didn't enter out of, I guess we could say, emotion, because it looked choppy to me. So that's something I have to work on, is if all the confluences are there, enter. If every confluence is there, enter. If the confluences aren't there, don't enter. You know? So Tuesday, I think realistically, I definitely could have taken that. If I look now, what could I have done differently? I mean, on the minute, we can see that we had the order block in the right place. Because that's another thing I was a little worried of, is did I have the order block in the right place? But I think I did, because we swept liquidity. Realistically, it would have been there, the top of the move to the bottom of the move. That would have been too high. So yeah, I think I did have the order block drawn in nicely there on Tuesday. So that was Tuesday. Could have taken that trade, but I didn't because it looked too messy to me. So should have stuck to the rules and should have taken that trade. On to today. So today came around. If we look, we have almost a trend reversal coming on here. We've gone from higher highs, higher lows, higher highs, higher lows, to lower highs, lower lows, lower highs, lower lows, lower highs, lower low, well, not lower high, but you can see we're on a clear downtrend, okay? You know, lower highs, lower lows. Even if we look at the hourly, I think on this morning, before market opens, if you look at the, where you look at that, you know, break of structure to the downside, break of structure to the downside, clearly on a bearish trend at the moment, definitely a trend reversal happening. So what happened this morning? We had a trend reversal. I knew this, bearish daily bias, okay, and as you can see, perfect trade. Look at this, a 1 to 3 6. But did I take it? No. Let's talk about that. Why didn't I take this? So this morning we've seen equal highs here, massive area of liquidity, especially with equal highs. You know, definitely a lot of liquidity sitting above these equal highs. What does price do? Come down, smash these highs out, sweep in liquidity. When price sweep liquidity, what did I do? I drew my order block. Did I draw my order block here? No, I drew my order block here. From the wick to the high. What did price do? Not come back into this order block. Then I didn't enter because it didn't hit my confluences. Price didn't enter the order block, so I didn't enter because I didn't have any confluences to enter apart from just a liquidity sweep on equal highs. That is not enough. You've got to have at least 3 confluences for my trading strategy. So I just didn't enter. And then when price was about, I think like on this candle here, about 11.15, something like that, 11.15 to 11.20 we'll call it, here, I was looking back and I could clearly see price was dumping, and I was like, why is price dumping? Here we swept equal highs, but surely there would have been an entry. So I was analysing a bit, and I was looking, and I seen this low here on the 5 minute, and I always say I want 5 minute retraces. Realistically, what I drew was the 1 minute order block, not the 5 minute order block. Where am I? I'm lost. Yeah. I drew the 1 minute order block from that low to that high. I want 5 minute retraces, and I don't want a 1 minute order block, that's for sure. So when I redrew it and realized that the low was here, okay, the low is this low wick here, the order block becomes big, like that. What does price do? Comes out of the order block, comes back into the order block, break a structure to the downside, enter off the break a structure to the downside, like so, boom, price drops. So today I missed out on this trade, a 1 to 2, because of I drew my order block wrong. So today I'm going to have to really be mindful of that in the future. Make sure, double check I am drawing everything correctly. And the area we targeted, if I can find where I am, the area I targeted was this, no, the area I targeted, but you could have been this low down here. I don't think I initially targeted that. There was like a, I think it was an hourly low somewhere I targeted. Yeah, here. This would have been the hourly low targeted, like so. Oop, like that. Hourly low targeted. That would have been our trade. A 1 to 6. Oh, I wouldn't know. I would have had my stop loss there. So yeah. Right, let's be realistic now. Probably would have put my stop loss just a bit above there, like that. So it would have been call it a 2 to 4. You know, would have had a 2 to 4 trade in the space of just over an hour and 20. So yeah, big. I am definitely gutted about that trade, that I drew my order block wrong up here to these rather than that. Definitely gutted about that. Like, so simple yet so effective. Equal highs swept out of the order block, back in, break a structure, enter for short, absolute drops. So yeah, not much more I can say about that. Is just make sure I draw my liquidity areas, order block areas, equilibrium areas correctly. Double to triple check, I reckon. So yeah, to recap everything, what have we got? Good job on Tuesday, I reckon, sticking to the bias and not trading against the bias. Well, don't even enter with micro trades, we'll say. Don't even bother, even if it's like $10. Don't enter against the bias. If it's choppy, but it's still within your... I think there was news, but it was here. That's why I think there was news on Tuesday, but news had finished by the time I entered my trade. It was like 40 minutes after news since I entered my trade, 50 minutes, something like that. What time did I enter? 11. I think news was 10, sorry. So I was about just over an hour after news, that was. So just because news has been out, you could still trade an hour after news. It will look choppy, but I don't know. But just stick to the confluences. If they're there, stick to the trading plan. Stick to the trading plan. Don't trade with emotion. Unless it is really dead, like price action and whatever. But yeah, stick to the trading plans. Tuesday, just because it's messy, still enter. Monday, don't enter if it's against the daily bias. And Wednesday, make sure I'm drawing everything correctly. Make sure. So yeah, I'd say the days 4 through 6 recapped. And if we look at it, we could have, and another thing, I'm going to go back on now, this could have been a good trade, because I always trail my stop losses. And say now, like come looking here, price plummeted, this brick structure, would have seen that. Say now, I do have a habit of selling half a position and then just moving my take profit way down and just trailing my stop loss. If I trailed, I know me realistically, when we hit this breaker structure, I would have trailed just above here. Then when we had another massive move down here and we had this bullish candle, I probably would have trailed just above here, like that, and just a little bit lower, not really much, maybe on here. And then when we had another move down all the way down here, I probably would have trailed just above this green candle like that, these little highs, and I would have got stopped out really but there. So if I got stopped out there, we would have been looking at almost a 1 to 3. We would have with selling half position, well, half position here. So yeah, but it is what it is. But that would have been such a nice trade. Like, look at that. We'll have to use that for the thumbnail, I reckon. It's not really clickbait because it is in the video, but sadly I didn't take it. So yeah, that's a recap through days 4 to 6, and hopefully I can do better tomorrow and stick to the plan better. Whether there's trades or no trades, stick to the plan and be happy with the day. So yeah, see you tomorrow maybe.